Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Wednesday, March 25th, 2020. I'll start out here with the equity markets. You guys certainly have your homework cut out for you with that commodities video. Took quite a bit of time today to put that together, and usually they're not so long. In hindsight, I probably should have stripped out the energy commodities, oil and natural gas, done those in a separate video and followed up with the agricultural commodities. But either way, what I did, I listed the order, I covered everything, so if you want to jump to something else, by all means go ahead. But take a look at that, and again, that's part of that whole series I've done over the last week or so, covering different asset classes to kind of paint a big picture of everything that's going on in the financial markets, where the opportunities might lie, whether it's trading ideas, swing trading ideas, whether it's trend trading, long-term trading, investing, portfolio diversification. I mean, there's I think a lot of takeaways in that stuff. So anyways, I'll let you look at that when you get a chance. Or we'll keep this one shorter. We'll just cover the equity markets here. All right, so SPY and QQQ, as I said, I was leaning towards, expecting a breakdown. They did break down below those trend lines. Got that post out to you plenty of time before the close. That went out at 2:49 p.m. I think, so over an hour before the close today, showing you these trend lines and saying, safe bet. We did limp below them, and then what really triggered the selling, you can see once we took out that 250.50 level, that was T1 first target. We'll sit back here. You don't see it on this chart because only the pre-market trades right now are showing. This won't show the pre-market trades from anywhere but either this morning and today, although let's see, they're not showing here now. But all right, since I screenshotted that post, and you have to be quick. This is a quick market. You can't, you look at these levels and either anticipate the breakdowns like I like to do. If it looks to me like a breakout or a breakdown is imminent, sometimes I'll take a starter position. Or if you're going to wait for that sell signal, you can jump on it. You got to be quick, as you can see. Once we took 250.51 out, boom, it was a big drop there. And look at that, just about a perfect kiss of that level. In the last update, we were a little shy of it, the post I just put out after the close, but there it is. We had a low of 244.61 and then bounced, so that target was hit. And again, that was my minimum target, first target. So let's talk about where we might go from here. Things you can see I had circled before in those 30-minute charts that went out earlier today, an hour before the close, and then right after the close, I had a circle. This is what I call high-level bearish PPO crossover. You had the PPO extremely high levels. You don't even roll back in time. You don't see PPO usually get that high, and it was already starting to curl down, indicating a bearish crossover is likely. And we also had an extreme overbought reading here on the RSI 30-minute chart. And so that's it. So this may be it. The market's certainly still closed up. You got to give it to that. But again, it's not almost to be expected. We went into the day still long that XLF trade. I'll get to that in a minute. Like I said, I had a feeling they might get us on that stop, and so be it, and that's fine. Nobody ever went broke taking a profit. And I mentioned in there, for those of you that gave it a little more room, we did go on to hit the that final price target today on XLF, or what was the final target. So that's it. SPY drop. Is it going to go down more? It's a pretty good support level. I don't think right away, but I think there's a decent chance. So I'm more apt to trail stops down on some swing positions. I might game quick bounce on the futures here. I may even pause the video to do so, or afterwards. We're at support, and what I mean by that is you can see this that 244.93-ish level right there. Reactions. We were pushing on it before. It was at all these highs right there, and all those levels right there. So that's it. Now that's the bullish case would have us reverse and just keep going up here and hit this next potential target at 260.90. Whereas the bearish case, if we break that, that's not going to be a good thing. Looks like a little bit of a bear flagging action actually broke down since I started the video. This is a 1-minute chart of SPY, and it's showing you the after-hour trades. We're going to get to the futures in a second. You have the 3 components to a bear flag. You have an impulsive leg down, that's called the flagpole, followed by a period. This would be more of a bearish pennant, we call it. A bear flag is a flagpole followed by a level of consolidation that looks like this, followed by a breakdown. And so when you have in this case, this is a bearish pennant, they're identical, they're close cousins, pretty much the same pattern. And there's your sell signal breakdown. So if we can get more downside going, The measured target for a flag or bear flag pattern or a bearish pennant is the distance of the flagpole added to the highest point of the pennant or the flag before it breaks down. So that would take us down below there. We'll see. This is, that's you slide into the close today. Again, I'm leaning that way. You just have to, if you're trying to swing and get a larger, there's the uptrend line, by the way. If you're trying to swing, get a larger downside, you're going to have to probably give it a, you could tighten stops right here. That'd be a pretty tight stop above the flag, because that's one way to trade these flags. If you're going to play it, get a breakdown, it has no business moving back above the flag or that area of consolidation. So that would be a tight stop, and you could have a more liberal stop up here, maybe around entry if you shorted a break at the trend line today. So that's how things look right now. Let's go to QQQ. All right, now let's go back to the 30-minute chart, and boom, boom, boom. That's it. Same story. It's a nice clean uptrend line. It's cracked below it. But the real catalyst was when that 185.46 level, that was what I call the BOD, or benefit of the doubt line. Since you have two support levels in close proximity, you have trend line support. That started a downtrend, but it didn't really bring in the big sellers until 185.46 went. That was the second target here, T2 on the QQQ from way back here. So we've had a nice rally off the lows. The million-dollar question, is that it? For about a 15% rally in QQQ. I think that is certainly enough to satisfy a minimum, bounce for a bear market rally, and it could certainly go more. Let me put up some Fibonacci retracement levels real quick and just kind of see where we're at, how much we bounced so far from the highs. Let's put the fib lines there, tighten it up to right there at the highs up here, and it tells me, yeah, we're not even to the 32% fib. That would be, if we can get up there, if we get another thrust up tomorrow, which is certainly possible. I don't want to assign odds to it. I would say a little less than 50-50. Again, I'm leaning towards at least, well, here's the thing. I'm leaning towards more downside here, but we can do this. We can still pull back, get that more downside, come to that next support around 179.13, and then rally up and get there. That's certainly a possibility. There's a lot of possibilities. I'm just telling you right now, we have a sell signal. Take it for what it's worth. It was either good for a quick, 2, 3, well, from the highs today was more than that, but that's not where I posted it. The breakdown was right here on the trend line. And so far, that was good for about a 3% pullback in QQQ. Like I said, I'm leaning towards a little more downside. It could be a lot more. This could be the end of the run. There's not enough of the charts to tell me that right now. I'd have higher confidence if we bounced a little higher, squeezed out some more shorts. It's all about, bear market rallies are all about clearing out the short interest, clearing out a lot of the, not all of it, but a good part of it, the excessive short interest, clearing out, bringing the put call ratio down, bringing the VIX down, and most importantly, convincing the masses that the worst is over. That's usually it. And so just when everyone thinks that market's going to new highs, that's usually when the end is. And I don't think we're probably not there yet. I'm sure as much as we've rallied now, like I'm just showing you here, we haven't even hit the 38%, 38.2% Fibonacci retracement. But we may not. I mean, there's some really bad things going on. I won't even comment on the stimulus package. I've already said many times over, the global economy, even the U.S. economy, is too big of a machine for any amount of money printing, anything, financial shenanigans to stop. When people stop going to work, when planes stop flying, that's been unprecedented. It's going to have a big impact. And, even if we start to get back to business soon, those impacts are probably going to have ripple effects that are yet to be seen for quite a while from now. So, anywho, that's kind of my near-term outlook. Kind of leaning towards a little more downside here, and possibly a lot more. This could mark in hindsight, this could be the end of the run of a bear market rally, or maybe not. I'll kind of let you know my thoughts if I get any more confidence as we go. Go back to SPY, and then I'll get to the futures. SPY, let's see what SPY retraced so far. I've come up here at the last divergent high when the market topped, and we're still same story, that 38.2% Fibonacci retracement. If you guys have no idea what I'm talking about, they pop up over here. Here's my fib Fibonacci retracement levels. That comes in a little bit above that potential T2 level there, which we're still shy of in the S&P 500 SPY. And there, those levels, T2 and T3, the final targets are defined by this big old gap back here. And so, QQQ has been stronger. Again, because SPY got knocked down hard with a lot of financial stocks, service sector, things like that, companies that took it on the chin worse than the tech companies. But there it is. Like I said, we already hit that target there, that 244.93 pullback target that I had. We hit a low of 244, where my pop-up box keeps going away, 244.61 on that candle. So we hit that, almost a perfect tag. Went here below. I think I might have already covered that. And where do we go from here? Well, if we do drop lower, you still have the top of a very significant gap right there, all the way down to about, I'm going to put it here a little bit above the top of the gap, about we'll call that, everyone likes round numbers, we'll round that up, 235 right there. That's the potential target if we have another leg down in SPY, either in the after hour session tomorrow morning or tomorrow. And still can't rule out right now the near-term trend is up. It's a nice little pullback, nice, good for a quick trade, but it doesn't change a whole lot technically, other than the breakdown, of course. But if you look at the trend here, we still have the workings of a near-term uptrend, and a series of higher lows so far and higher highs. So if we can have another thrust up to T2, that's going to keep this near-term right here uptrend intact. But the intermediate term trend right now is bearish for sure. Okay, I told you I'd do an update on XLF. So like I said, I had my concerns this morning, and I don't, I only play the hindsight game and say, maybe I should have left the stop as is, or a looser stop. But you can look at that. It went on. Look at where we hit today. Look at the highs. I zoom in here. Remember, I always adjust. Official targets are set there. I adjust these. I don't adjust the unofficial targets. Those are actual resistance levels. This was an official trade. So T2 was set at 2106, although I had the trend line at 2122 all along. That would come in those highs. We hit a high today of 2120. Okay, that's close enough for government work. 2 pennies on a $21 share price, and then reverse pretty hard. So for those of you that gave it a little room and then held to that target, congratulations. And it could continue up, but again, we were getting frothy. That's some big gains in short order, high level PPO rolling over like that, overbought conditions on the near term. But still for now, the very near term trend in the financials is bullish. We've been walking our way up here like this, so it could continue up. If it does, 2250 is the next potential target. But again, to milk a decent part of the 21% rally in the what's most likely just a bear market rally. And another way to look at this too, guys, remember the basis of this trade was a breakout of the bullish falling wedge pattern. To take the measured target on a bullish falling wedge, there's several formulas. I like the simple one, and it actually works pretty darn well. You take the widest part of the wedge, which to do that here I like to use a trend line on whatever chart program you're using, and you can either take that same trend line, I got to move it right there, and right here there's the widest part of the wedge, and then you can either create a parallel trend line and move that, or just drag that same trend line and you place it to where the wedge of the pattern broke out of the wedge. That gives you where the stock or security broke out. That gives you a measured target. And the way I trade, if I have two targets, like for example here, 2250, I have that level turned down. I'll turn it brighter for you. So let's say I have two potential targets, 2250 and then one here at 2122, like I do. I'll always opt for the smaller target if the measured target comes in between. Why? Well, why get greedy? Why try to milk out an extra few cents? That's where I'll usually set my targets. So these measured targets for chart patterns are just rough estimates, but again, the point here is that it's pretty much met its measured target or came darn close to it. We're also in a bear market, so when you're trading bullish chart patterns and counter trend rallies, you want to err to the side of the lower end targets, lower end estimates of those ranges, just like in a bull market when I short pullback trades, in a bull trend. you don't go for the longest targets because dips usually get bought up pretty quickly. So there's kind of a takeaway, and bottom line is I think there's a decent chance that's the end of the run for the financials, and if they do go up, I think 2250 is, at least at this point in time, my max upside target. So from where we are right now in the after hour session, that could be another 11%, or from today's highs where T2 was hit, about another 6% or so. Okay, so what happened in the futures? Well, the futures hit, these are, I don't believe I've added any price levels to ES chart today or even recently. I talked on these levels before. I had a resistance level slash potential target up here at 25.49.69 or so. Round that off to nearest quarter or whatever. That was hit almost perfectly. And that was, you can see right here, remember I talked about how those lock limit down levels, you see these little blue lines, it's where the futures were hitting lock limit down or up levels, and they were halting trading, or not halting trading, but when you hit the lock limit down, you can tick up, but the price can go higher, but it just can't go lower. And likewise, we hit, I think at least one day we hit a lock limit up, maybe 2 days on the futures as well. But those levels acted as support and resistance levels. Many of those did, and again, that's the target we hit. Now, when we did it, if you recall this morning, I pointed out we had a small divergent high, right, on the ES and NQ, very small, and it led to a very small, the pullback that I was expecting last night, that roughly about 3.5% pullback. No, that was right here actually. That was then this morning. Yeah, I expected another pullback. That's right. And we hit that once again. We hit the same level, that 2386 big level. But this time around this morning, we had a small divergent high. So what happened today? Well, we bounced off that support level, and the divergences didn't go away. They only extended. They're even larger now. Therefore, this is factoring into my analysis where that fact we ran into resistance with another divergent high and an even larger divergent high, which could lead to a larger drop. So I'm making a mess of this chart, but we'll zoom in a little tighter, and you can look at levels to watch if you're an ES trader. It's a trend line. I'm not super crazy about it because there's not that many reactions on it. It's just a potential trend line. I'm more focused on these support levels. Right now we're at that 2460 level. Remember, that's where I posted as a short trade last night in the late day video, closing market wrap video, plus in the comment section below that post last night. That was good for that 3.5% pullback. It's certainly a level to watch. We've had a lot of reactions on it, and we're there now. So it's simple. There's that move down that I showed you. We had that late session drop. We're potentially flagging now, and we're at support. So one of two things happens: we either hold that support and bounce, or we break down. And if we break down, it could be breakdown of that flag that could take us down here. And I'm leaning towards that way. Not very heavy, but I'm going to try to trade that down to 2386 and see if we can get that tonight. Even if we happen to bounce first, there's some resistance ahead. I think that's a doable target there. And if we go up, if you want to know, okay, well, all right, Randy just laid out, downside targets, downside scenarios. Well, all you have to look for now, the next bullish event would be a breakout of today's highs. We've had 3 60-minute candles fail at that 2950 level, or 2550 level. So if we can break above it, especially if we can burn through these divergences. When I say burn through, I mean you make a higher high in the PPO and the RSI, you no longer have negative divergence. You've negated or taken out the divergence. So, and that could open the door up for a move there to about 2696. Certainly a possibility. One we'll have to look out for. Right now, not my preferred scenario. We'll just see how things trade tonight into tomorrow, and we'll know if we pop it and start going. There's a lot of volume, and NQ has also taken out resistance, and then, like I said, it increases the odds considerably that that's where we're going to go to next. All right, NQ. All right, NQ, same thing. I'm going to zoom in a little tighter here so you can see it better on the video. Here's the levels we've been watching and trading off of recently. That was that 7620 level that was hit after the market closed yesterday. There was that 3.5% or so pullback. Come back, test the trend line, thrust it back up. And this morning, like I mentioned, we had negative divergence here and here, and at this high, and so it was favoring a pullback there. We pulled back. That was better than a 3% drop. Another thrust up, and all that did, let me take away those lines, it simply extended the negative divergence just like it did in ES there. So you had divergent high 1 here, correction 1. And it's the same divergence, it's just larger. So DH2 you can call it, but again, it's the divergence that started back here. Because from that point, the indicators have been making a series of lower highs, while the index, in this case NQ, is making a series of higher highs. And here's that trend line. Remember back here, I was using this trend line as a support level, highlighting that. It was a early on a trend line that was forming early on, and we can extend that out now, and it comes into play soon. So we break that, then looks like, let me give you a level here. I'm just looking at this chart. I think I need to add a line here that could come into play as minor support. Right about, yeah, let's just be safe, use the bottom of these candles there, about 73.75 almost. You have trend line support. If that breaks, then it looks like we could come back here to 72.73-ish, but there's also this trend line, maybe get back tested once more. Or again, you have to be open to the possibility that the bear market rally, if that's all it is, I'm just going to go with this for a while under the assumption that we're not going to see new highs in the market anytime soon. So I'm going to keep calling this a bear market rally until the point that it's no longer, that doesn't look like the case anymore. And I'll try to let you know if and when those views change. So going off the assumption it's a bear market rally, we have to be open to the possibility that it's over, and then these are all just speed bumps along the way down. Yeah, we'll see again. And how to trade it, if you shorted NQ anywhere in here, and you're willing to give it some wide stops, because that's this market. You either act quick, get in and out, get on these, take profits on these levels when your targets are hit, reverse. But if you're going to swing trade it, whether it's QQQ or NQ, or MNQ. Remember, guys, I keep talking about NQ, but if you like these futures, you want to trade after hours, you're out on the West Coast or somewhere outside the U.S., you have the micro mini futures, which trade at all these same price levels, but a much smaller leverage factor, which is, I'll tell you, it's a lot easier to stay in a trade in this market if it starts to go against you, as long as the basis for your trade looks good. I don't ever condone holding on to a trade, just praying and hoping it's going to work out. But as long as, if you short, and let's say you shorted this divergent high today and you were going to give it room, and then went up here, and you were underwater at this second divergent high, but the case could still be made. You were at a previous reaction high or just above it, and you still had the divergence, so you went underwater there. It's a lot easier when you have a small position, one contract of MNQ. I think, I'm pretty sure it's 1/10 of the size of NQ. So you could have 5 contracts at MNQ, and you're only a half position size on NQ. And the same thing with ES. You have the MES. Just put the M in front if you like to trade the S&P 500 MES. If I can do that there, that would be the micro for the ES contract. All right, that's about it. Let me see if there's anything else. Yeah, why don't we talk about LQD real quick? A wash, rinse, repeat scenario, or trade, I should say. Shorted it here. Originally covered it where we covered it on the first, off the first thrust down, sidestepped that bounce, that kickback rally, but then re-shorted it there, swung it down. I'm forgetting, these are the new targets. So we so far we've traded this one with near impunity, but right now we're short again. What I did here, I tried to get that post out to you as quick as possible and started working on it. We were right there, and then it started to back off a little bit, but that's a 61.8% Fibonacci retracement. What those lines are from, it's measuring the move from the all-time highs down to that recent lows. Perfect hit of the Fibonacci retracement level, and I also have a resistance line there that I turned off the value, but it's at 123.29. That would have been on my charts before. That's right here. You can see these reactions. I set the stop up above here and want to give it a little bit of room. Well, what this is the Fed knowing what I know and I think the government that hey the corporate bond market is about to collapse and the whole financial system is at risk. So they're throwing in just trillions of dollars of liquidity injecting into the system. I wouldn't doubt that Washington's probably, you've been on the phone to Moody's, AM Best, all these rating companies, if not asking them, probably outright ordering them not to downgrade debt. Now that's dangerous, and if at some point that comes out, there's that, I don't want to use the term illegal, but it certainly wouldn't surprise me. But what where I'm going with that is, inevitably there's going to be a flurry of downgrades. There has to be, with the massive change in the fundamental outlook for the economy. So everything, the whole case that I made, in other words, to short this here, is still able to be made, and by the Fed, gunning the market up with all these, emergency liquidity measures, injections, quantitative easing, trying to shore this up. All the better. Like I said, trading a bear market is like swing trading or investing or trend trading a bull market, but in fast forward, and you just got to be quick. So although it's only been 1, 2, 3, 4 days, we've had a kickback rally in LQD that rallied right back to that resistance level that I had, a former support level when I had that line there before, about a 17% rally. Could it carry forward more? Sure. If they stop us out, then what's our loss? It's not much. It's less than 3%, I think. So we're risking, that's even, I think we might have got in a little bit better than that, about 3%. And if we go on to hit our T2, and by the way, I will most likely extend targets on this trade. I just wanted to get these out. That's about almost 7.5% or so. So at that point, it's about a 2-to-1 RR. But again, I do intend, most likely, if things start playing out the way I think they will, and this is about it for the run, end of the run in LQD, I will most likely add additional targets, and I'm very open to the fact that these lows get taken out. So this may, like I said before, I was considering allowing it to be a runner trade, but my gut told me to close that one out, and glad we did. The second trade, both trades, but we sidestepped a huge give back in profits when we closed out when we needed to. And then that weekly chart, remember, this is the big picture. Weekly chart LQD, multi-year trading range. We shot down through it, momentum fueled overshoot and a breakdown, but for all the reasons, I was also not keen on shorting or staying short the stock market, because I knew everything in my body, every bit of me knew that the Fed and the government was going to come in and pull out all stops, do anything it takes to shore up the market. And I also knew that that would be, at some point, to a greater or lesser degree, be received as bullish by the masses. But again, I don't think they can, unless, again, it all has to do with the news flow here. If like I said, if the coronavirus situation starts to even just abate, it doesn't have to completely, it's not going to go away overnight. Then yeah, it could add some legs to this bear market rally. But I do think, as far as LQD goes, just getting back to this, I think it's objective, but for the fundamental reasons that I just said a minute ago, as well as the fact we kicked back to pretty much the top of the range here. It's more of here's a trading range right here. This is the high end of the trading range and low end right here. Okay, see, this is the low end. We had a reaction there, reversal. We had a bunch of reactions there. We failed right there. We failed right there. The top of the range, bottom of the range. Bottom of the range, midpoint of the range. And so what we just did is we shorted the bottom of the top end of the range, if you will. That's same numbers I had before. Last week, 121.71 up to about 124.54, and that's, to me, very objective short. And like any trade, it either works out or it doesn't. So give it a little room on the stop, and I would just be shocked if that's it, and we went to the bottom of the range, fell out, and we just go to the top and go on to new highs. I very much favor in the coming weeks to months another run back down towards the bottom of that range, and quite likely ultimately down below it. All right, we'll wrap it up here. I was going to take a look at the long-term charts. I jumped out to my QQQ weekly chart, and I have all these different boards. They'll show different different levels. But I was going to show you this one. I haven't showed this in a while. I find this stuff kind of interesting. I was using Fibonacci retracements earlier. These are called Fibonacci fan lines. You pick a starting point, and I find that it's uncanny on how they fit certain rallies and then corrective phases. So back here, this was all the way in 2017, coming off this starting point. Just look at how they act as, and what you do is you move the line here, you put the starting point, and then you drag the bottom point. In other words, you don't place each line, they're set based on the Fibonacci sequence. But it's amazing how well they act. In other words, you can see this trend line, it was capped, worked as an uptrend there, and you had a downtrend line there. When the trend line's broken, and this is common, you get these spikes down, you hit the lowest fib fan line, but you snap back up. And pretty much once you finally break one fan line there, then that becomes the next support or resistance level. And you can see here, you walked up this one, you were between these two here, and then finally when you finally had a breakdown, remember this line was tested here, you finally broke down, back tested it, boom, that was the meltdown in 2018 right there. And then I started a new set of fib lines here at this point back on the lows on December of 2018, and you can see again, it's just it's impressive, I think, of how these fan lines act as support. So you have the uptrend line there. Once it was broken, you shot down, and as you often do when there's a corrective mode here, you break a trend line, you may overshoot one of the fib fan lines. In that case, we overshot almost all the way down to the bottom one, but then the candles closed back here, and then this became we were bouncing around these two fan lines. We broke right here, went down below, and you can see that one acted as support all the way up to here. We back tested this fib fan line there. Finally, when the last fib fan line went right here, broke down, that was it. Good night, just like this one. Broke there, good night. It doesn't really, at this point, give me any more predictive value as to how much lower we go. At least not anything I've figured out yet, but I just figured I'd share that since I haven't shared these for a while. All right, let's wrap it up here. See where we open tomorrow. Again, my degree of confidence on if we're going lower and if so, how much isn't very high. So I'll looking for a little more downside. But I think the best thing to do is not go too heavy. It's not an all-in short moment at this point in time, nor is it an all-in long moment. I think the bulk of the upside, the bulk of the counter trend bounce, I think is over at this point. The bulk of it doesn't mean we can't go up another 10%, but we've already gone up. What did I say? How much have we bounced off the lows? 15, I think I said earlier, right? Yeah, 15% off the lows so far. So that's a pretty good bounce. Oh, and then the S&P 500. What did we do there? Because remember they got beat down, so. I was looking for outperformance on the SPY, and that's it. We got it about 17.5%. And again, that's because the financials, were priced for death. So when there's any reprieve in the market, any kind of rally, hopes that maybe the worst is over, what's going to do better, of course, would be the ones that got beat down too much, since the tech stocks didn't get beat down as hard as the financials and industrials. So that's what led to the outperformance in SPY. But you can see here right at resistance too, about 240, 254.36, and there's next big resistance level up there. All right, guys, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.